Good morning, welcome to the market view for Thursday the 10th of April 2014. If we look at yesterday's activity, we can see that the market continued higher when we'd marked up the 76% from the high to the left down to the recent low. The market was already through this, but we're struggling with the 167.50 area. The market managed to trade through this eventually, but first off we're struggling with this area, but then found support at the 76% and then moved higher following Yellen's announcement later on in the day around 7 p.m. On the overnight, the markets traded higher and then come back. It's traded up to the 168.21, which is the recent high back from 13th of February. So let's have a look in more detail, see what happened in the shorter time frame. So we started off with the market pulling back a bit, trading higher, then attempting to go short. In yesterday's market view, I spoke about the resistance levels to the upside that are likely to be tested, and we see the market trying to move lower but failing to do so. So there's one way of actually mitigating the loss on this, and let me just put the trade markup in first so you can see where the entry price was, and I will draw it in the right place first of all, just be below there, so we can see the market just being taken in here at 167.23. I'm just going to pop the crosshairs on as well. I'll just close that. And here's something that I've spoken about many times in the market view as well. Here we have what is a test bar. The market is thrust down, the trigger price is hit on the order, the entry price, and then we see the market come off the lows. The candle remains red, but the volume is green, and when we get these opposing colours, whether it's in the upside or the downside, generally the market reverses. Not only that, we've got the downside, we've got the red coming in there, followed by a green. And one way of reducing the loss, which in this case is 25 pips initial risk, as I've said many times, you can actually draw in a 50% above a green bar, the first green bar that appears in a down move, because this is a sign of strength coming into the markets, and in particular with the testing in the background there. The idea of this is to, or the test bar, is to drive prices lower, see if anybody wants to sell. If they don't want to sell, the market is brought back, and you see that with the green volume bar, and then prices moving higher. So we can reduce the risk from 167.48 down to 167.38, so only a 15 pip loss. There was another buy signal later on in the day, and again really nothing. And as I mentioned yesterday in the market view, because of the FOMC meeting, the market did unusually wait until Yellen spoke later on in the evening at 7 p.m. and then you see the reaction to what she had to say. And well, actually this is an hour and a half later, because this is the 2030 bar. 1900 is when she spoke, if I recall, and nothing really happened, and the market reacted later on as a delayed reaction there. And then from there the market's just traded sideways up to the resistance in the daily chart, which we've just looked at, and then back down to yesterday's close. So a horrid day really, because the market was waiting for the news from the FOMC. So let's just have a quick look, see what we've got today, see if there's anything that will move the markets. At 12:30 we've got the asset purchase facility. It's that time of the month again where we've got the official bank rate, the MPC rate statement, and unemployment claims as well from the US. That's the weekly one, and the G20 meeting as well from 3:15, and this will go on until tomorrow as well. Well, it normally does, so I'm suspecting that is the case. So we can expect possibly a bit of movement this morning, and then certainly as we go through the day. Let's just go back through these economic news items. Let me give you a bit more advice. Asset purchase at midday, you don't want to be in, because obviously we got the release of the official bank rate at that time as well. MPC statement, you don't want to be in with that. And unemployment claims from the US come out at 1:30. That one possibly not too bad, because it's not the non-farm payrolls, it's the weekly figure. And G20 meeting, well, unfortunately that starts at 3:15 and we don't know when it will end, as far as statements or what may be released during the meeting to the media. So it's a bit of a tough one, that anything that's geopolitical could see the currencies move as well. So really we've got a window this morning to trade up until sort of midday, if we get a move, of course. If it's like yesterday where the market was waiting for news, then it just traded in a sideways range. There's nothing we can do about it. We're at the mercy of what the market throws at us. The day before yesterday, Tuesday was a great day, Wednesday not so good. Fingers crossed today will the market will redeem itself and offer us a decent trade. Right, well, that's it really, short and brief to the point this morning. Not a lot else to say. I can't give you any targets off the daily chart as far as fibs are concerned. We've still got this resistance at 16827 to take out at the moment. So have a quick look and see if I can get some sort of pointers for further upside targets. Here we've got 167 again is at an area, but we're already through that. So let's just see what we got back in August 2009. We've got 168.14, and then before that we've got 168.79. So you may want to make a note of those. And let's see what else we've got. We're going all the way back then really to 178, but there is a 170 in between as well. Don't forget 170 will be a psychological level. There we've got 174, so this could be the 175 and 177 there as well. So that's sort of, the area after we've got 170 and then a few more to the upside as well. So that's it. All things being equal, I will see you in tomorrow's market view. Have a great day. As ever, thank you for your support, and as ever, thanks for watching.